Katie said first thing this morning, she put out the question is disruption for disruption's sake. And what we're going to do in the next 35 minutes is to test that question. We're going to look and see whether disruption really does benefit the consumer. And to help me do that, we have a great panel of 5 speakers from across the financial services spectrum. And I'm going to ask them to emerge now, beginning with Iain from Stripe. Followed by Lucy from Capital One. Michael from Azimo. Monica from Neyber. And last but not least, Shaun from Nutmeg. Great. So the first thing that I'm going to ask each of you to do in turn, and I think we might as well go in the order along that you're sitting in along here, is to describe what you do and how it is disruptive, and also how, in your view, it benefits consumers.
Sure thing. Good morning, everybody. My name's Iain McDougall. I work for Stripe. Stripe is a San Francisco-based payments company. We've been around for about 6 or so years now, a little over 1,000 employees in all the usual locations around the world. I think I described us there as a payments company. I think it's probably fair to say that we've come to do more than that over the years of our existence. But in terms of the theme of today and consumer benefit and so forth, really what we've set out to do is kind of build the underlying kind of economic infrastructure for the internet. We believe that the ultimate goal is to make it easier to move money around the world in the same way as it is easy to move information around the world, and that ultimately what we're striving for there is providing the tools and the technologies to our customers, which are businesses, to in turn give choice and simplicity to their customers, which are most often consumers. I think we know that the world's kind of financial infrastructure is very complex. It's built up over many decades, and so the premise of Stripe is to use technology rather than finance to simplify that and ultimately to give consumers convenience, choice, and financial inclusion.
Great, thanks, Lucy. What about Capital One?
Yeah, so Capital One have been around in the UK for 20 years now. But really, we've always been really quite a disruptive organisation. And in more recent times, the focus is very much on how can we make credit cards work better for consumers. And so the really great example I've got of this in recent times is we've got this tool called Quick Check. And many of you will be aware of soft searches and the fact that one of the fundamental problems with applying for credit is that, first of all, you have to decide that you want it, and then it decides if it wants you. And that creates a problem for consumers, and we've recognised that problem exists. And what they really need is the anxiety, that moment of anxiety where you apply for a credit card needs to be taken away. You need to know what you can get accepted for before you commit to an application. And so that's something that we've re-architected our application infrastructure such that we are now able to give people certainty of acceptance or not before they commit to an application for a credit card. And that addresses a fundamental consumer need, a fundamental problem with our part of the market, a point of friction. And we've invested to take that point of friction away and really seen that provides a powerful message for consumers.
So to a certain extent, you're disrupting yourselves by offering a new tool to your customers or potential customers, whilst Iain is disrupting the world by giving greater access to e-commerce solutions really globally. So it's a very different sort of type of disruption, I guess.
Yeah, absolutely.
So as far as you're concerned, Michael, from Azimo, I mean, people have been sort of transferring money for forever. What's so disruptive about what you do, and where's the benefit?
Sure. So Azimo is a cross-border platform aimed broadly at consumers. We deal with businesses as well, and we're helping people send money back home, mostly for their family. I guess the demand for that service has been around for as long as history. World Bank tells us 1 in 7 people globally are dependent on some kind of cross-border payment. And we're trying to do that in a much cheaper and more efficient way than traditionally was the way that people did it, was either carrying suitcases full of cash or envelopes full of cash, or traditionally people like Western Union or MoneyGram do what we do, and putting it into a digital environment, giving people back control and offering them significantly better pricing. So if we think about the average remittance over the course of a year, it can be several £1,000s, sent frequently in terms of the payroll. We can save people hundreds and hundreds of pounds over the course of a year. So, and those outcomes that we're generating are going directly into education, grocery, family support. So it's important stuff. We try not to lose sight of that.
Great. And Monica, lending has been around for a long time as well. What's the feature of what you do that you would regard as disruptive, and the benefits that you're providing from Neyber?
So at Neyber, we're focusing on the consumer segment, but I would say that the differentiation is really our route to market. So Neyber essentially partners with an employer, and we provide employees with access to consumer borrowing. So the typical scenario would be somebody that maybe has credit card debt or even payday loans, and essentially they're obviously paying quite high rates of interest. The idea of the Neyber model is that by partnering with the employer, we can debt consolidate people or lend for other consumer needs, but essentially we can mitigate risk by taking repayments directly from an individual's salary. So the model is disruptive in the sense that we aim to be far more inclusive than a traditional lender, and we aim to be far more affordable in terms of the rates of interest that we charge. We're also focused on boosting financial capability. So we have our proprietary digital financial wellbeing hub, which is aimed at actually improving, financial literacy and providing people with financial education.
Great. So the themes that are sort of emerging are twofold at the moment. We're talking about costs, reducing costs for consumers, and we're talking about broadening access, and including broadening access through offering tools that encourage people, will give them the confidence to use a product like a credit card. Turning to Nutmeg, does your disruption fit within those broad categories, or is there something else that you're offering which you regard as disruptive and beneficial to consumers?
Yeah, so I think for us, the first thing is accessibility. So if you look at traditional wealth management sector, if you have £1 million, there's plenty of people who will look after your wealth, give you a high quality wealth management service, look after your portfolio. But actually, if you go lower than that, there's very few people that offer it. So our very first concept, very simple, is actually how do you provide access to a high quality wealth management service to everyone? So you can start with Nutmeg with as little as £500. You get a really high quality portfolio. The performance is as good, if not better, than a traditional private banker model. So for us, the primary driver was accessibility. And then you move on to how do you improve the service? So how do you not just provide a quality service, how do you improve on that better than the traditional sector? So for us, that's lowering costs, making it digital, making it very accessible online service, great quality service to our customers, and providing great returns. So for us, the accessibility was very much the foundation of the business, but it's actually how do you move the wealth management industry to the next generation model, which is where we're moving, and a lot of that's around data and how we interact with our customers and predict their behavior.
So I think, again, one of the things that has emerged from what you've all said is that you've sort of found a bit of a niche to start with, and that is your way in. It informs your business model. But again, some of the speakers earlier this morning have talked about the importance of scalability for a FinTech. So if you're looking at the future and the need to sort of scale up, how do you think that you're going to keep the consumer benefit at the heart of what you do? And do you think it's important to do that, or do you think, once you're up and running, you've established your reputation, the most important thing is to grow, and the consumer benefit sort of loses focus at that point? Who'd like to respond to that?
I'm happy to take a stab. I think the word that's invariably going to come up here is trust. I think ultimately consumer trust is the thing that determines the success or failure of, particularly in the B2C world, of some of these kind of disruptive or innovative business models. I think increasingly, there's going to be nowhere to hide for companies in this kind of increasingly open and interconnected world. I'm sure we'll talk about open banking at some point. I think that's definitely the area where both the opportunity and the risk for some of these business models exists. Depending on whose numbers you look at, 2/3 of people say they just absolutely would not be comfortable in sharing their bank account kind of information or providing a third-party access to their bank information. Yet at the same time, I think that's where the potential benefit and opportunity for consumers is ultimately going to come. But we all need to establish that kind of that first level of trust. I think we'll get to the point where we reflect on this period of the industry and say, well, wow, how did we even consider operating in a world where we didn't have this high degree of interconnectedness, between financial services, in the same way that we would look back and say, well, how did we exist before the internet? Realistically, we've all had those moments in our consumer lives. But I think the amount of effort that's going to be required to establish that trust, be it, GDPR and PCI and insert your favourite piece of regulation here. All of those things are critical to establishing that first layer of trust.
So are we talking about enlightened self-interest? Is that at the heart of it, that your future depends on doing the right thing and maintaining that trust?
In a world where consumers ultimately have a lot more choice, which is the benefit here, then yeah, I think absolutely that is the case. Consumers will vote with their feet if they don't feel that's there, because they have greater choice, and switching costs and switching complexity is arguably is becoming lower.
So Michael, is it always just going to be cost that where you see the real benefit?
People come to us for cost. They stay for service and user experience, I think, is broadly speaking what we do. But we are a technology company. We're not a finance company. And I think if you look at who's going to win in this sector, I think it's the technology companies. So 70% of my most valuable employees are either data scientists building product or they're technologists. And I can't tell you what the product will look like in 5 years' time, but I can tell you for sure it's going to look nothing like it looks now. So that's how we have to keep our edge. We're constantly looking at machine learning at the moment, whether or not that will improve our customer outcomes. We're looking at blockchain, whether we can speed up the settlement function that we perform in the back end on our platform. But all of that stuff requires you to be a technology company. And if you think you're and that's why we're all going to, if you're all these technology companies, I think, are going to win, and you look at the share prices and the market believes that as well. If you are a technology company that happens to do finance and is constantly looking for ways of applying that technology to get better customer outcomes, then you're going to win. And if you're not, if you're a finance company that happens to hire a bunch of developers and then get rid of them afterwards and then decide to do something else, and it's about who you put in charge of that company and who you put in charge of focusing on the customer outcomes.
Monica, is cost at we've heard earlier today about the importance of keeping costs low and that giving you a competitive advantage that you can then pass on to your customers.
Yeah.
Is that going to be the heart of the benefit that you'll continue to provide, do you think?
Well, I think the thing is that technology is obviously vitally important in terms of being the enabler to provide access to financial services. And if you look at other sectors, so if you look at retail or if you look at things like Uber, for example, the reason that those models endure, in my view, is that they use technology, but ultimately they're offering a genuine consumer advantage. And I think for FinTech to mainstream, you actually have to deliver those consumer benefits. So the way that we obviously come at it is very much from the point of view of using our product, our our risk mechanisms and underwriting and credit score to effectively try to understand the customer better, and also the payroll deduction in terms of mitigating risk. And then we can take all of those kind of cost advantages in terms of lower cost of acquisition because we're working via the employer, lower default risk because of the salary deduction, and then we can effectively translate that back to employees in terms of more affordable borrowing. So I do think it's a combination of using technology from the perspective of providing access, also using technology so that you have the best user experience, but also making sure that there is a sustainable advantage, which means the consumer has to benefit.
Yeah. So in terms of trust, Shaun, I think that is a very key point, that if you don't keep a focus on consumer benefit, then you can very quickly lose value that you've built up in a business.
Yeah.
So for you, where do you see the biggest risk in terms of the maintaining trust for consumers?
I think for Nutmeg, obviously we're not traditional fintech in the sense that we're not transactional. We are fundamentally built on trust because people are giving us their pensions, and if we do a bad job, that has a material impact on their future lifestyle, their retirement. So for us, trust is absolutely paramount. Customers are leaving their money with Nutmeg and we're managing it, so that trust has to be built day by day. So for us, we do a lot of work to try and humanize the service so they know there are people behind it and they can talk to people and they can understand what we're doing, being very transparent with our service, what we're doing for them, how we're managing their portfolios. Through Brexit, it was very, very important for us. We massively over-communicated before and after, which really built trust rather than hurting a business like ours where investment markets were very volatile. That really built a lot of customer trust. So it's an ongoing relationship that we're keeping with our customers, and absolutely as we scale, building that trust and keeping that trust is absolutely what we're focused on. And as you say, being very close to the customer, we're not focused on selling product, we're actually focused on what customers are trying to achieve, whether that's their retirement or their house deposit or their lifetime savings goals. We're very much focused on helping them achieve those rather than giving another product that would maybe give us more margin.
So from what all of you have said, to answer the question, is this disruption for disruption's sake? I mean, it would be an emphatic no, because the technology wouldn't give you a business model, basically. So you've all had to look at a consumer need and then use technology to leverage that need from a business perspective. So how sustainable is that as an approach to business going forward? So, Michael, you said that you have no idea what you'll be doing in a few years' time when you've accumulated sort of vast amounts of data about your customers. Is that, and for all of you, do you see data as the way to continue to provide a benefit to customers?
I hope nobody's going to sit on this stage and say they don't see data as fundamental to their building their product or their business. So every single market, you've got a race to the finish line, which it's probably 10 or 15 years away in financial services, between the incumbents and them getting the technology, so them improving their product set, and they can do that by investing in technology, they can do it by acquisition, they can do it a number of ways, and the startups who they need to get scale. And the view is, my view, personal view, is that you're very likely, you should bet on the startups in this particular market because of the way that they use technology and the way that they are constantly responding to consumer needs. I started my career at a management consultancy that will remain nameless, and they worked on multi-year engagements with financial services providers to build new pieces of technology 3, 4, 5 years in the making, and then when they released them, get a good press release out of it, but the consumer would have moved on. So this is a race, and if you want to win in a race, you've got to have the right people, the right data, but you've actually got to be using all the tools at your disposal to win that race. And it's a race on scale versus getting tech.
So one of the things that I always I think until today probably I always would say is that I thought that most startups' ambition was to be very, very good at one thing and then to take that thing globally. But earlier today we heard that you need to diversify, in order to stay ahead and continue to grow. Is that, again, going back to the sort of consumer benefit perspective, do you think that there's a risk in diversification itself into areas that, where you see the potential for a good return and the consumer benefit is sort of lower down your list of priorities?
I would say that need to diversify is probably a little bit dependent upon, the market you play in and the nature of what you do and so on. But I think it's, Stripe ourselves were, a startup to begin with. We're now, we think we're further down the maturity curve than that, I guess, now. And it's natural that you start to look for the adjacencies of, well, what are the other things that I can do to, help your customers based on that initial more narrowly focused specific thing that you may have done. So I think that's pretty natural to do. I think the other kind of dimension to increasingly what we all end up talking about in this world of financial services and FinTech is the global nature of what we all do now. It is simply easier to be global as a startup than it ever was before. That was the premise of where we started as a company, that we felt that it was too hard for startups to get off the ground and do that last piece, which was take the payment from the consumer, irrespective of country or geography or currency or preferred payment method. So I think that is, to your question, I think that is sustainable. I think I would agree with Michael's sentiment. I think we're at the start of the race. We're not at the end of the race. We've got a long way to go. But I think the opportunity that sits in front of all startups to scale-ups to incumbents that are reinventing, I think the opportunity is significant. But diversification will almost always be part of that.
Mm. So diversification is probably not something that Capital One have a great history of. I mean, you've really focused on doing one thing for as far as I know, in the UK at least, since you've been here.
I mean, credit cards are absolutely what we do here in the UK. And obviously, as you'll be aware, the story of our US business is very different. I think the thing I would want to bring it back to on this is, technology and ability to innovate quickly is absolutely table stakes as far as we're concerned. But I think the thing that really matters is addressing a core consumer need. And whether it's diversification or whatever else, it's like, do you understand your customer really, really well? And do you understand what will make a difference for them? And if you do, then they have a reason to even engage with you. The trust question that we're all mentioning comes kind of after that, and the temptation could be that you would want to do something short-termist that would actually damage the long term. For us, everything is about values, and how do we bring our values as an organization to bear for the benefit of the customer? And in doing that, then we build trust, and then we build scale, and all of those great things follow. But really playing that, that longer game is absolutely crucial to our success and absolutely crucial to the position we have in our market now.
So, Shaun, and going back to Nutmeg, diversification in order to continue to benefit consumers, do you see that on your agenda at all? Or?
I do in part, because if you look at the UK market, we think there's a market for our service of around 10, 11 million people. So it's a very broad market that could take an investment product, could take an investment management service. So actually the market is still very large. But for us, the broader step is to offer financial advice to our customers. And for us, it's not about actually how do we do what everyone else is doing. How do we completely revolutionize advice? How do we make that digital? How do we make the experience more up to date with what customers actually want and what they're telling us from all our focus groups? Not just trying to digitize what already exists, which is very much a face-to-face annual meeting. Is that how do you digitize that? How do you make it really what customers want and what they're prepared to pay for? That's very, very important for us. So it's really expanding that breadth of financial advice and investment across different needs people have, and it's not just a holistic thing. It may be very modular, one particular area that they need advice on. So for us, it's actually, we've done a lot of work in digitizing investment management. How do we digitize the full spectrum of advice?
So you touched on focus groups, and I suppose a question for all of you. It's fairly recent that the idea of having a senior board member who focuses on customer experience arrived on the scene. Do you all have programs focusing on customer experience that you use to drive the business? Michael, what about you?
So of course, I mean, I've been in this sector for over 10 years, and the whole idea, the genesis of Azimo, genesis of Tandem Bank, which I founded, the genesis of Small World that I founded as well, was just stuff's broken. And I knew that as a customer, and I knew that from talking to other customers. It's hard to institutionalize that kind of thing. We do it both in the people that we hire, we do it in regular customer forums, and then we have a huge amount of data, and we have a dedicated data science team, and one of the ways that they talk to people is actually they pick up the phone and ask them and go and meet them, but yeah, it's hard to keep that consumer focus as you scale up, and also my problem is I've got a huge diversity of customers. So there's 1.5 million people on the platform, senders and receivers, and they're all the way through from investment bankers sending six-figure amounts to the kind of people who are going to be cleaning this room at the end of the day, sending a couple of $100 every couple of weeks. So there's a huge range, and it's very hard to talk about a customer, and that's another area where technology allows you to tweak your product set to exactly that type of customer. So at Azimo, right now, no two customers will get exactly the same product experience, and that's something we have to iterate on to make sure we give everyone what they want.
So Lucy, you're the CMO.
Yeah.
Is that synonymous with customer, a UX specialist these days, or?
Yeah, so I'm responsible for, within that kind of marketing role, actually all aspects of our customer-facing strategy. And the thing that's really interesting for me now, and absolutely enabled by technology, is the fact that, once upon a time, a credit card was a piece of plastic with some terms and conditions, primarily designed by mathematicians more than anything else. And if I look at the way that we design our products now, it's a combination of designers, engineers, analysts. We are, something like Quick Check, where we are, you can only create that product once you've understood that there is a universal human truth, which is that when you come to apply for credit, it's an anxious moment. Regardless of your status, regardless of your background, there's a moment there where you think, will I get it? And that bit of understanding then informs everything that comes after. And so, yeah, it's a much more customer-back approach that we take now, rather than, hey, I've got this idea, let's put it out there and see what people do. Actually, it's what is the need that we're addressing? What can we design that will meet that need? And from that, all good things follow.
I would just add to that. The whole term customer experience program, I think, has the potential to position customer experience as this almost optional piece on the side, whereas I think the experiences, a lot of the newer entrants into the market realise that actually it's just such a foundational layer to everything that really what Lucy just said, that it's not something you think about as an afterthought. It's just kind of a fundamental aspect of everything from product design to internal process or whatever. And if you can get that right, increasingly I think that's going to be an important thing.
So Monica, you've got, in a sense, two sets of customers. You've got borrowers, employees, and I imagine they're sort of typically from a similar sort of segment of the population, but tell me if I'm wrong. But then you've also got the employers. So how do you go about sort of getting feedback from both sets of customers in order to tell you what you need to do to keep your momentum going?
Yeah, so I think that's a really good point because, it's a B2B2C model. And in many ways, we're obviously very focused on making sure that the consumer experience, the people that are using the platform, the end consumer, is actually benefiting in terms of, the rates at which they can borrow at, in terms of the user experience, that they're getting the education served in the right way. And so obviously we have to address that in terms of our, product design. But at the same time, in a way, the person that procures Neyber is very much the employer. So it it could be the HR person, the reward director, for example. And in many ways, their sort of agenda in terms of what they're looking for their employees can often be similar, but also quite different to what the employee wants. And so they're very much focused around, broader concepts such as financial well-being. There's also probably a slightly higher hygiene factor around, the type of proposition that they would actually endorse. And so I think it's really important that when we're looking at products that effectively we're essentially focusing on those two different sets of objectives. So we spend a lot of time in terms of our internal product innovation. So we have a very significant focus on product development, both in terms of what the employer is focused on, but also what employees actually want.
So that goes back to you. So Shaun, you sort of introduced this idea of getting customer feedback. So I'm interested to know how you do that. I mean, I did look on your website, Michael, yesterday, and there's quite a lot of chat about how much money people have saved. Do you have the same sort of thing on Nutmeg about how much money people have made, and how do you, if you do, how do you sort of manage that?
I think that's always very difficult from a regulatory perspective. We are clearly bounded by the regulations, quite rightly, in how we talk about investment returns. Customers, I remember Brexit, when the first 2 days the FTSE was down by 7%, and our customers were all positive. So they were tweeting pictures of their portfolios saying, UK's gone into Armageddon, and yet I've made money in my ISA, which is funny because customers were talking about it, but of course we couldn't talk about it in the same way. But coming back to the idea of the user experience and testing, we test everything. So particularly around language, when you describe an investment service, we need to get it in the right language that people can understand, because financial literacy is very low in this country. Most people have never invested before. I think 46% of our customers are first-time investors, so completely greenfield market, but you need to have the right language that this service is accessible, digestible by a very wide population without turning off the experienced investor. So for us, everything has to be tested, new services, new ways we communicate, and we try to get as much feedback as possible. Customers love giving us feedback, good and bad, very proactive in giving us feedback. They give us feedback into how we communicate, how we give a monthly video on investment markets. They love to come actually. I get quite a lot of customers that come up and talk to me in the street and tell me they've got a Nutmeg portfolio and to give feedback. So customers are very, very engaged.
So you made another interesting point that we talked about broadening access, and just now you were talking about making the product accessible in the way that you communicate it. And I imagine again that this is very much part of the benefit that you think that you've been able to bring about through a disruptive look at the way in which incumbents have communicated with their customers. Is that because, to be honest, sometimes when I look at startups and fintech companies, documentation, it's not great, and very often it's because they've copied somebody else's, and there's a real mismatch between what is being communicated and the product itself. So presumably that is a sort of way, again, to stay ahead of the competition, is to look at the words you use, the modes of and different ways of communicating.
I mean, for me, this has been the great thing for us is when you can look at there's regulation, there's rules, right? Take digital accessibility, for example. Everybody needs to comply with rules around digital accessibility. What we've been able to do, because we're investing for the long term and we want to do what's absolutely right for the consumer, is to work with the RNIB to say, how does this website actually work for a customer who has a visual impairment? How do we actually make sure that all the menus work and that they can use it with a screen reader? And that's been like a 2-year investment to make sure that we meet their really high bar with a load of partially sighted and blind users working with our site to tell us what does and doesn't work. I think when you can genuinely disrupt is when you hold a bar that is just higher or different or better. That's when design starts to get really exciting, because when you start to design for those populations, you start to be able to do something very exciting for the broader population. You can learn a lot by really examining the experience for that smaller group.
So the message I'm getting is that you can't really distinguish between disruption and consumer benefit, or if you do, then you're imperiling your future. So I think we've run out of time, and perhaps we just thank everyone on the panel for their contributions. Thank you.
Thank you.